broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me as always, my colleague Sonia and Nigel. Good morning, guys.
Hi, good morning. Well, so many cues this morning, right?
Oh, absolutely. And the RBI is the highlight of the day in that sense. Although they have a bit of a reprieve because last night's comments from, Jerome Powell were not as hawkish. And I think that sets us up in a decent way. Markets have not been smacked hard as some were fearing. That all that optimism that there is a lot of disinflation in the system, etc. And, after the jobs data, which was so strong last Friday, Powell will basically push back against all of that. It's not happened. So, the headline is, and we can go into details in a bit, we'll play some sound bites in a bit as well. But, he was not as hawkish as many expected, many feared rather. And he did not meaningfully deviate from what he said during the post-FOMC press conference, which was last Wednesday. And I think that is a good thing. By the way, the market action in the US was absolutely bizarre. I mean, it was crazy. Markets rallied for the 30 minutes that Jerome Powell spoke. Markets rallied non-stop, right? And then they got to the high point of the day. Then they completely sold off. It went into the negative, the S&P, and then in the last hour, last 45 minutes, they rallied back and ended almost at the day's high. Not quite, but almost the day's high. The Nasdaq is there. The yields went up about 3.5 odd basis points. They sit at about 3.65, 3.68 odd percent. By the way, market pricing of what the Fed will do in terms of later this year still prices in 30 basis point rate cut, right? So what has happened is that post the jobs data, market is saying, well, maybe the terminal rate will be slightly higher, but they're not taking away the fact that they still expect rate cuts in the second half of 2023. And I think that is what stock markets also paid attention to. We have a big move higher in oil, though. We'll watch this carefully. Brent prices are now closer to 84 than they were, at about 81 or so a few days back. And this is important in terms of macros, etc. The rupee has been under a fair bit of pressure here in India. You want the single largest import to kind of rise sharply in terms of prices. So bears watching. The RBI decision today, I think if you asked economists a week ago, 2 weeks ago, they would have said, well, nothing. But I think after what we've seen in terms of the US jobs data, market pricing of the Fed terminal rate, I think a 25 basis point hike is expected. There's 2 hours to go for that decision, and we'll of course get you extensive coverage on that. But a 25 basis point hike is expected. What they say in the press conference, I think, will be critical as well. Just 2 levels. On the Nifty, it seems to be consolidating, right? I mean, look at yesterday's close. We seem to be consolidating under the 20-day moving average. 17,874 is that level. You need a decent close above it to kind of look higher. The Bank Nifty closed higher. It's doing better as compared to the Nifty for the last few, but it's still below its 20-day moving average. There, the 20-day is at 41,726. And supports basically come in at about 40,131. That's a daily lower Bollinger Band that we've been highlighting. So that's the setup. Tentative kind of start. I think that entire Adani-related news flow is slowly but surely fading into the background. And there is enough other stuff the market will fixate on, including, of course, the monetary policy today. Guys, hi.
Absolutely. And this comes against the backdrop of the market being, having a negative bias, right? So it's consolidating for the last few days, but the bias has been on the downside. And there's large selling that continues from foreign investors, so unabated selling from FIs. Yesterday, it was almost 2,500 crores, in fact, a little over that in terms of selling. And now put together in the last 4 trading sessions, FIs have sold over 7,500 crores. DI has bought a very small amount, so the bias is definitely on the downside from the foreign community. In terms of earnings as well, lackluster earnings both from Hero MotoCorp as well as from Bharti Airtel, the 2 nifty components of the earnings season. And we of course saw Tata Steel as well respond negatively to its numbers yesterday. So the fag end of the earnings season is turning out to be quite weak. Bharti Airtel was hit by an exceptional loss. Hero MotoCorp margins below 12% for 4 consecutive quarters now. This morning, though, the opening is expected to be on the positive side because of the good handover we got from the US. So the Dow was up about 250 points. As Prashant was also mentioning, the key takeaway from the Fed chair's comments so far is that inflation is on a declining trajectory. So in that context, things are looking good globally. The RBI policy, I think 25 basis points rate hike already priced in. But let's not forget that the Nifty has now lost about 2% from the high that we saw in the month of January. And that 17,800 mark continues to be a bit of a resistance on the upside. So, give and take everything. I know the RBI policy is important from a macro standpoint, but from the market trajectory view, I guess this market is on a downtrend. It needs some sort of trigger to take it out of that, consolidating bias.
Well, that's the hope, Sonia. And the Fed chair has done its part overnight. The dovish commentary that came in there, that will ensure that the SGX Nifty starts in the green. But as I've been saying, chasing the morning gap up hasn't been really beneficial. So today as well, given the kind of cues, you'll be waiting by to hear from the Reserve Bank of India governor. So don't chase that opener. The start will be good, but can the RBI governor deliver something that ensures that the end as well is good? Remember, the Nifty and the Nifty Bank, they're facing a bit of a resistance at around the 20 DMA, and we're unable to conquer that mark decisively. The FIs, they're net short on the index. Well, yesterday, not too much of positions were added, but the short positioning is at around 84% odd. And it seems, in case there is some good news, they chose to play it via calls, because yesterday they bought some calls, and they bought calls rather aggressively in yesterday's trading session. Close around 8 calls were bought for every 1 put. Now, the PCI we have seen, when it comes to around 0.7, 0.71, 0.72 odd, that's when the markets see a bit of a bounce. Now, we're some distance away from there, but from a couple of days ago, from around 1.05 odd, it's come down to around 0.8. If you see that's trending lower, with the FIs being net short on the index, that could give reason for a bit of a short covering bounce. What did they buy yesterday? It appears the 18,000 call was bought. The premium out there is only around 12 to around 15 rupees odd. However, the 17,700 call and the 17,800 call, both of them premium between 50 to around 120, 130 rupees odd, they were getting written in yesterday's trading session, which brings us to the levels. Since the 17,800 call, 17,700 call, well, both of them were getting written, you have a bit of a resistance zone. That's 17,875 to around 17,950. I say that because that coincides with the 20 and the 100 DMA. On the downside, first level of support comes in at around 17,750 to around 17,600. If we break that level, maybe we'll revisit the recent lows. That's what we saw on budget day. Nifty Bank as well, similar setup. The 100 and the 200 DMA are in that vicinity of around 41,750 to around 41,850. On the downside, we've seen some bit of support at around 40,800 odd. So let's see whether or not that level can hold out. SGX Nifty suggesting a gap up. Don't chase that. At some point of time during the day, that market is likely to experience a fair bit of volatility and maybe, in fact, move to the low point of the day as well. So let's see how that pans out.
All right, Nigel, thanks very much for that. Well, let's quickly tell you what's lined up here over the next 30 minutes or so of the show. We get you updates from markets across the globe. Ed Yardeni of Yardeni Research will join us to discuss the global setup. Our research team gets you the top 10 stocks to watch out for in a little bit from now. And we get David Choksi to talk stocks and fundamentals with us at 8:30. So that's the lineup here over the next 30-40 minutes.
All right, so we do have a lot of calls coming in as well this morning. First up, a view from Mahesh Nandurkar of Jefferies, who says that the FY23